This is a crucial time. My goal is to purchase as much Nvidia stock as possible before the market fully realizes what's about to happen. Are you anticipating a significant rotation, or do you think their movements will be as dramatic? Well, John, we've seen this happen in big caps before. When someone claims that the Russell 2000, which is composed of even cheaper companies, cannot grow 40% in the next 5 months, they are ignoring that we have already witnessed significant movements in the mega caps. This is because Nvidia has risen 40% in just 8 trading days. The mega caps don't need to go down, in my opinion. What I'm trying to say is, do you think it will occur alone with the little caps? I am aware that Nvidia has taken such action, as have a few other stocks. However, what do these other items accomplish if you're referring to all of the tiny caps, the small caps as an index rising that much? A 40% move in small caps, in my opinion, does not always indicate that the market as a whole will decline. Simply put, I believe it will emphasize that the market is expanding, which is something we can all anticipate. In essence, though, it's a risk-reward analysis, which goes like this. Look, if you can increase earnings by 18% and pay 10 times earnings, maybe that's a decent risk-reward. And I think those who have been holding cash and bonds for the next 5 years, or who have money sitting on the sidelines, will change their minds. Small caps, in my opinion, are the best option for a fair risk-reward ratio if the Fed decides to start cutting. Does the development of the thesis need severe cuts? Do you notice any more problems that could jeopardize your thesis? A recession, of course, would be bad. The Fed doesn't need to make significant cutbacks, in my opinion. Actually, it simply must. Well, I believe that the idea that real interest rates are currently too restrictive would be the best market narrative for small caps. 5.5% in contrast to inflation, which is going near 2%, and bringing rates back down to 3%, which is the neutral rate. The market doesn't require the cutbacks to be front-loaded if it thinks so. However, they must think that we are returning to neutrality. That would, in my opinion, be a major motivator for small caps. All right, allow me to ask you some questions regarding mega caps and consumers. How significant will Nvidia's earnings be next week, not just for small caps, but for the entire market narrative? Nvidia is significant because it supports the actual push for productivity through automation and digital tools that is propelling the American economy. That disinflationary trend is crucial. Naturally, all of the major American corporations are based in the United States. I mean, it's a worldwide phenomenon that helps American businesses. Therefore, it is quite crucial in my opinion. However, Nvidia's stock isn't that demanding either, given that it is trading at 26 times forward earnings. I would not recommend, then, sell Nvidia to buy small caps. Nvidia is still a long-term investment, in my opinion. What about the holiday season and consumers who are under a lot of stress, especially those in the working class? At the start of that season, what types of figures do you anticipate seeing? That frequently sets the tone for the performance of retail stocks and other items. Yes, the customer is experiencing stress. Credit cards, auto loans, and adjustable-rate mortgages are all known to have high interest rates and are therefore governed by Fed policy. When consumers are paying these exorbitant rates and inflation is declining, it has been a very penalty-driven rate. Cutting rates would therefore be advantageous. It would also help if gas prices dropped. The third, I believe, is CEO confidence, which has been affected by the Fed's tight monetary policy. I believe that firms will become more expansionary if the Fed begins to imply a cycle of rate cuts, which will benefit consumers as well. What more is required of Lyft as they attempt to compete with Uber? Look, I believe they are in a good position because they have the best and most lucrative market, which is the core market. There is already competition in any new area they enter, whether it be grocery stores, restaurants abroad, or other new ventures, and the profitability of those new growth areas will be structurally lower. That is our concern with DoorDash. It leads the market for restaurants in the United States, but as time passes, their profitability will decline in all other areas they deal with. Profitability in the gap is crucial. It's most likely the only firm with a market valuation of $60 billion that posted a GAAP profitable first quarter today. Therefore, once more, I believe that valuation is a major problem for us. I also believe that, when growth slows to the mid-teens and profitability declines over the next 12 to 18 months, the company's long-term profitability will not be as high as that of a standalone mobility company like Lyft or a major global player like Uber. We are neutral because of this. All right, Dan, Carney, and Rico, you just joined Nvidia. When analysts discuss the cost of catching up, it seems like they are implicitly referring to Nvidia. The price of trying to catch up, perhaps not all the way to Nvidia, but to a point where you are unquestionably more competitive. Yes, that is a difficult task. First of all, I would never undervalue Dr. Lisa Su because I think she is fantastic. The revenue guide, or call, was actually about 7.5 against 7.54, and they even stated plus or minus 300. Therefore, it seems to me that sentiment was entering with a desire for a large number. Although the gameplay was obviously subpar, I do believe that Nvidia is generally cannibalizing itself by producing larger, faster GPUs like Blackwell as part of this catch-up deal. And when these large cloud service providers move from training to inference, will they suddenly require all that computing power? Therefore, I'm not entirely convinced about this catch-up trade since, by the time they catch up, would we still require all of these chips and GPUs? Therefore, I believe the market has noticed this. We'll show you that it's up. What, 2% for the year, in contrast to Nvidia's up performance? I apologize for interrupting you, but we are attempting to compile the stock-by-stock comparison of AMD and Nvidia for the current year. Please pardon me, but let's continue throwing up. Yes, I did just say that AMD should be treated as a separate business. Although there is some overlap in their functions, Nvidia has a clear advantage when it comes to AI spending on GPUs and Blackwell. That's just the way things are. Therefore, in my opinion, catch-up is not a mathematically sound strategy. Well, if it doesn't tell the narrative, I'm not sure what does. What does Jason Snipe do? Since you own both Qualcomm and Nvidia, you tell me. I take it you don't own AMD. You don't need to tell that story because it's not particularly interesting. Scott, I don't necessarily think so. It goes without saying that the price action conveys a tale. And it was obviously a light guide, I believe. The guidance wasn't terrific, but it was a rough quarter. I mean, they beat on the top and bottom, whatever. And I believe that when you go back at ASML and their earnings, which were also ugly, and then you see what happened with Taiwan Semi, whose stock I know is owned by Wise, and it was a blowout, it just goes to show that there are a select few businesses who are truly succeeding in this market. And Nvidia, well, let's just call it that. You have a stock that was over a third higher than Nvidia at the beginning of the quarter, at 80 times trailing PE. They don't expand as quickly. They're still more costly than Nvidia now, and that price will go up next year. What were people thinking then? This trade is solely based on momentum. No matter how excellent Lisa Su is as a CEO, I have no reason to think she isn't. This isn't her fault, and I do like and respect her. It might be her fault that she caught the GPU wave a bit too late. CPUs are still crucial though. The point is that, given that Nvidia is currently selling at a lower valuation, it was foolish to own this stock at that price. I own Nvidia, so I know they're both overpriced, but I'm not sure what folks were thinking. And we'll discuss a healthcare organization that might be in a similar situation. It still doesn't make sense. It's AMD. Let's talk about two topics. Since you mentioned the spend's beneficiaries, let me ask you a question before I go on to Meta. What's AMD up to? That stock of yours is having a bad day. I think it's reasonable to say that it's striving to catch up. As an actual owner of this stock, what do you think? The internal discussion is that AMD is doing really well, assuming you weren't looking at the results from Nvidia and other companies. It's developing nicely.